All right, let's take a closer look at Wendy's stock. They are cheaper than competition, but there are also some macro headwinds for this industry. So let's just get right into it. We can see stock price year to date down about 15%. Let's do a quick comparison. We see, for example, El Pollo Loco up 23% year to date, McDonald's down 16, so similar to Wendy's, and then Papa John's here down about 40%. We can also see here that price to earnings for Papa John's is almost 20, so more in line with the broader index. It's the same for McDonald's here, 21, more in line. And then we can also see El Pollo Loco here coming in cheaply at 13.5. Also a lot smaller company, only at 337 million, so a lot more room to growth in terms of the market cap. And then we see here Wendy's 16.55, so cheaper than, for example, McDonald's or Papa John's, but more expensive than an El Pollo Loco purely in terms of price to earnings. Although Wendy's have the greatest yield, they also have a market cap of 3.3 billion, so they are a quite substantially large company already. It's not big time in any way. This is still quite a small company, believe it or not, but they do not have that rapid growth expansion path that a lot of very small cap stocks potentially have. An interesting stock nonetheless. If we look at the financials, we can see that they are growing revenue quarter on quarter compared to the same quarter a year ago. Just small growth in this segment, and I think that this is something that investors might be worried about with this whole Ozempic trend, making people want to eat less calories, with this whole focus on a more healthy diet that we're seeing with consumers. However, when this still growing revenue, still being profitable, still having good margins here and profitability from the business, even with the rising cost of labor in America, with minimum wage going up, I think that we see a lot more media coverage on this than the actual impact on the economy. California deciding to rise minimum wage salary, that's just one state, although it's a huge economy because it's so big in tech. That does not necessarily translate to a whole bunch of fast food revenue, and in the bottom line of things, it does not seem to make a whole lot of difference here. If we zoom out a bit, we can see that the stock price has been quite volatile in the past, leading up here to the financial crisis. Just a huge dip, but then a steady recovery until we saw this flash crash with the COVID, where there was a ton of fear, uncertainty, and doubt. Great buying opportunity, and a lot of people made a bunch of money here during the COVID times, but then just a slight decline after. And this decline that we've seen, this bad performance on a 5-year basis, is something that we've seen in a lot of stocks that are growing. We're seeing the index being pumped up by the likes of Nvidia, Apple, Alphabet, just these big tech companies that constitute 60% of the index and just keep pumping. And the rest of the market has not really followed up in the rally. So if you were to have a good performance year to date, especially, well, then you would have had to had a bunch of shares in these mega cap tech companies. But in my opinion, I think that these things are cyclical. I think we tend to see one sector performing very well, having a bull market, a bunch of retail investor money just flooding into it, and then it gets a bit overvalued, it goes down a bit, and then the retail money start to flood somewhere else where it's starting to go up, and that could potentially be the fast food sector. They have some headwinds, but they have not kept up their stock performance, and just simple reversion to the mean would have this company outperform in the near to mid-term. Although I have some more worries strictly from the Peter Lynch perspective of taking a look at the product. was at McDonald's for a few months ago, for example, and I saw that the beef patio was just not as thick as the pickle even. So the quality of the product, I think, has declined hugely. Never been to a Wendy's, so I have no idea if that's the same thing at that fast food restaurants, or if the product, the quality is still good, wanting people to go there and eat. But this is super important, and it will reflect in the numbers later on if they start to drop down in quality. You know, you see the numbers, but you don't see if the neon sign on the building is out. That's an old saying that I just made up, but you get the point. You can watch the numbers, but if quality starts to decline, well, eventually that will show up in the numbers as well, and stock price will just decline. So it's very, very important that they have a good restaurant experience, that they offer quality at a good price compared to competition. And since I never been to a Wendy's in my entire life, never ate there, I think it's maybe a very American chain, then I can't really say if I would buy, sell, or hold this stock. All I can say is based on the numbers, and if they do a reversion towards the mean, well, then they could outperform the market on the short to mid-term basis. And I can also say that in terms of valuation and price to earnings, they are cheaper than some of the competitors, but once again, we see, for example, El Pollo Loco here coming in a bit cheaper, also with a smaller market cap, a lot smaller market cap, and that leaves a lot of room for expansion in this case. Although if we take a look at stock price here, it's been lackluster, so I would have to do a deep dive to find out why in that case. But for Wendy's, as the comment requested, I think that they have the potential to outperform in short to midterms. Although if I were to look at this stock long term, I would have to know more about the company. So I don't feel comfortable investing any of my money into this. That's the beauty of the stock market. I can just take a look at a stock. All right, I don't have enough information. I'm gonna pass by on that, and I'm gonna swing at the next stock pitch if it's one that I think I can hit. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.